It set a 7-year high during April, but we haven't seen much progress since then. So is there a medium-term top already in for the price of gold? Hello, I'm David Jones from Capital.com. Thought we'd do an update on the gold price looking ahead for the next few weeks. We did see this market move out to 7-year highs in April, but volatility has been pretty low since then. We haven't seen much progress. So in this video, I'll have a look at it in a lot more depth and look to get a trade on. As usual, if you're watching this and you haven't subscribed, if you can click on subscribe, support the channel, and we'll continue to push out lots of content like this in the weeks ahead. So here's the gold price over the last couple of months. Here's the move in April out to 7-year highs, best levels since November 2012. But not much progress since then. It's been a pretty tight range, really. It traded as high as 1746, slipped as low as 1660. So what's that? $80 range, about 5% swings, which is reasonable swings, but fairly quiet based on what we've seen gold trading over the last few months. So a little bit dull, but I think still interesting up here. We do have this trade running on gold, buying at 1720. Last time round, it's been slightly in profit. It's slightly against us now. We'll see if that needs any management. And I am going to set a new trade up for May as well. So I'll talk a bit more about what's driving gold. Then we'll come back and look at this in a lot more detail and see perhaps where the opportunity might be for the next few weeks. We'll go back onto the trading platform in a second and look to get a trade on. I think there are still opportunities, particularly if we get a bit of weakness from here. But let's talk about some of the factors around gold at the moment. So we saw this 7-year plus high in April, best levels since November 2012, classic breakout, but not much progress since then. And arguably, one of the things that's holding it back is the strong performance of other assets. Traditionally, gold is seen as this safe haven. But since the March lows, we've seen the stock market rally by more than 30%. So investors have definitely got something of a risk appetite back over the last month. So arguably that's made gold not quite as attractive as it was really when we saw that the whole coronavirus pandemic really start to spread. But although stock markets are up 30%, gold has still rallied 15% since those March lows. So it hasn't been completely deserted by investors. We've seen quite a bit of volatility in the US dollar. Clearly that has an impact on the gold price. And I think the factors to watch going forwards from here, I think it's all to do with the state of the economy and how it matches investors' expectations. I think plenty of people would find the stock market bounce back quite remarkable, the speed and the distance it's come back. And I think the risk is for stocks and the benefit for gold, if the economic reality ends up being much worse than is expected here. We've already had US consumer confidence out this week, and that's at its worst levels since 1973. So I think the fortunes of the gold price, if we see the stock market start to weaken, we could see that give a lift to gold. These safe haven assets start to come back, and the stock markets are definitely overdue some sort of pullback from here. We do have this Federal Reserve meeting this week, interest rate decisions, but I think what investors are going to be watching for is the guidance they give to future interest rates. I think if we see interest rates or more quantitative easing, more intervention from central banks like the Federal Reserve, that would be expected to weaken the US dollar and lift the price of gold. So I think so much really, it feels as if gold is almost in a holding pattern up at these levels, waiting to see what the next step is for the economy. We know the economic shock is going to be bad. I think the question is just how bad. And at the moment, nobody can really put a figure on that. But there are still opportunities. Let's take a look at some of the levels, then we'll go back and put a trade on. So the immediate obstacle is the high from April, so far in April. So 1746. That's as high as we saw the price of gold get. After that, I think we're looking towards really 1800. There's not much in the way. On the downside, we have a cluster of support really, again from April, because volatility has been so low. These levels are quite close by. So 1640, 1660, I think is a good level to watch for short to medium term traders. And we'll use that for our trade. Let's get back into it. Let's look at this in a lot more detail and get a trade on. It's become a bit of a tradition now to start this with the big trend that we're in for gold. Let's just focus on that first of all to remind ourselves. So we've been in this trend now since August 2018. So we are not quite 2 years into it yet. We're about 20 months into this trend. Trend line support sitting around $1,400 an ounce, long way away. from where, of course, the price is trading now. And I think what's more interesting is clearly, I think what's been going on since March. So we're going to zoom in to this in a second, but just to remind us of the big picture, let's just take this out and see where we are historically for gold. So here we go. We're trading at levels, like I say, not seen since November 2012. Next obvious major peaks, I think, are coming in from early 2012 and sort of September, October 2012, around about 1800. And then after that, we have the 2011 highs up at 1920 from a longer term point of view. But let's focus on the last couple of months. So this is where we are. This chart goes back actually to the beginning of the year. We saw the price of gold push to 1700 in early March, then sell off as low as 1450 by the middle of March. Then we've had that bounce back to where we are now, just off these 7-year plus highs. Let's look at the RSIs. Look at the indicators down here. I mean, everything at the moment is pointing to perhaps a bit of weakness in the short term. The RSI, the 10-day RSI, overbought April the 14th, did a pretty good job calling the top, tried to get near overbought, didn't go quite there, but again, it did call the top, an short-term extreme anyway, April the 23rd. The MACD, if we look at it down here, let's walk through the last few signals on the MACD. We had a sell signal mid-March, which did end up being pretty good. Buy signal March the 24th, which was after it had bumped up a bit, but did push higher. And we've just in the last couple of days had a sell signal as well. So in the short term, it wouldn't be surprising to see a little bit of weakness from here. But I think that could be where the opportunity is. So from my point of view, that 20-month trend is still up. We've recently broken out to 7-year highs. Trends are clearly up. So I still want to be a buyer. But I perhaps, for the trade this month, perhaps I want to look at stuff in a bit shorter term. Because I think we do have some good levels. I think the most immediate levels, we got the low from April the 21st, around about 1660, then the low at 1640 from the beginning of April. So we've got a good little pocket of support here, then deeper support down here. So for me, I would still definitely be inclined to be a buyer. I suppose the aggressive trade, if you really wanted to go short up here, going short now, where it's trading now 1702, 1703, with a stop the other side of perhaps the most recent high from the 23rd of April or a bit further back, April the 14th. So I suppose if you did think it was going to sell off deeper, there's a short opportunity up here with an obvious place for stops. I've got a long trade on already. What I want to do is take advantage of any short-term blip. So let's take a look at the short term. So I flipped this over to an hourly chart. Let's just focus on the price for now. Then we'll look at the indicators. So here's the move off the March lows, off those sort of 1450 lows. Big old move up to 1745, that sort of level. But we have seen that trend line break. You know, it's clearly fallen out of that trend and it's actually gone a little bit sideways since then. But we do have some obvious support, 1660, and then back here at 1640. So for me, if we saw a bit of a dip down again, perhaps back into the 1660, 1680 area, I'll be looking for some strength to come back in and perhaps a push back up to have yet another look at these highs just ahead of 1750. So that's the trade I'll be looking to set up. Let's take a look at the indicators, shorter term indicators. So a bit of a mixed bag at the moment. Looking on the hourly RSI, 10-hour RSI now, we had a low in there April the 28th, then another low later on the 28th of April. This is interesting because we do have what's known as bullish divergence on the RSI. So the market sort of slips back to the same low, slightly lower perhaps here, making slightly lower lows just about, but the RSI has made slightly higher lows. So it can be a suggestion that perhaps that run of weakness is over. And it had proved to be a good short-term bounce. But apart from that, at the moment, I don't think it's really telling us that much. It's trading around 43%, the RSI. Not much to gather from that. We had a buy signal back down here on the short-term MACD. It's hooked over. It looks, if I just zoom in, we've had a little bit of a sell signal there in the last couple of hours or so. So perhaps we see the market under a bit of pressure, but I don't think too much to go from the short-term indicators. So for me, it's all about the levels. So we have 1660 support, 1640 support just out here, around about 1639, and then bigger support coming back in at 1600. So the trade I am going to do over the last couple of weeks, we haven't really dipped below 1660. I'm going to put an order in to buy Let's say 1675. If we see the price push down to 75, and I'm going to put a stop loss the other side of 1640. Let's say I go, let me pick a level, 1630. So I'm going to buy her at 1675, stop loss at 1630. So really trying to capitalize on a pullback again into these levels we saw the last week of April, but looking for the market to bounce back up. Let me set that up. So I've set my order up here. I want to buy 6.2 ounces if the price drops back to 1675. And if that order gets filled, put a stop loss in at 1635. And my risk is the usual £200 on the trade. Let's set that up. So we've placed the order. The order's sitting there. So there's the order I just placed at 1675. I think I've got an older order. You can see on my charts at 1575. We can leave that one in for now. Let me just take a look at that. So there's the old gold position, bought at 1720, the market 1702, 1703. If I go to orders, there's the older order at 1575. Let's leave it in for now. And there's the one I just placed at 1675. If that gets done, put a stop loss in, $40. But it has been pretty low volatility past few weeks for gold. I think if we can finally break 1750, we'll find a bit more excitement come back into this market, bit of momentum behind it. We've got lots of pockets of support on the way down for gold. So even though it could come under pressure in the short term, I'm still expecting it to snap back. And I think it's only if we start to lose, this sort of 1560 area, the lows from right at the beginning of April, do I think we've got a risk of moving back to those major lows for March. But for now, I'm expecting a bit more chop, and let's see if we can get filled by any short-term weakness back below 1700. We'll see what the next few weeks brings, but for this update on gold, we'll leave things there. So from me, David Jones and Capital.com, good luck with your trading.